Hello everyone, welcome back to our Forex analysis video. Today we have 4 pair with us for the next week's analysis. So the first one is the British pound versus the Australian dollar. Here we can see that the price has been moving between a range, and in the last trading session it has just taken a resistance from the upper range. So now if we shift to the hourly time frame, we can see that there was a small retracement, but it was nullified during the ultimate trading hours. So what we can do now, as soon as the market opens and this swing is broken, we can go short, and our stop loss should be above this swing high. We can take our first target as this zone right here, and the second target should be around here, and the ultimate target should be this support zone. It automatically gives us the ultimate risk to reward ratio which we can receive here is around 1:1.1:5 risk to reward ratio. So the next pair which we have is the euro versus the British pound. Here if we see on the larger time frame, we can see that the price has been taking support from this zone for a long time now. And now if we again switch back to the 1 hour time frame, we can see that this trade can go both ways. Suppose the price comes down to the support zone and then gives a breakdown, we can easily go short at this point, and our stop loss should be above this support, this resistance zone, and our target should be at least 1:1.5 risk to reward ratio and then successive swing lows. On the other hand, what we can do is, if the price gives a strong closing beyond this zone, because this zone has been proving as a resistance zone for the price for a long time now. If the price gives a strong closing above this zone, we can go long. We can just go long from this point, and our stop loss should be below this swing low. Our target should be as follows. This should be our first target, this should be our second, and this should be our ultimate target. And now the next pair which we have is the Australian dollar versus the Japanese yen. If we check this pair out in the 4 hour time frame, we can see that after a strong bullish momentum, the pair has now been forming the pair is now forming a declining triangle pattern. Now if we switch back to the 1 hour time frame, we can see that the price is currently trading in between the support zone and our supposedly trend line. So I'm telling this as a supposedly trend line because it has only tested twice. The price has only tested twice on this range, and our trend line is confirmed when the price at least tests thrice. So the price is on its way towards the trend line, and I hope it will test this trend line this time. So what we can do is, you can utilize this gap in between. There is a gap of around 70 pips right here. Also what we can observe here is the price has already made a base right in here. So there is a strong support zone at this point. So as soon as the market opens in Monday and this swing is broken, we can go long with our stop loss just below the support zone, and our target should be at least this point, which will easily yield us at least 1:2 risk to reward ratio. The last pair which we have today is the euro versus the US dollar. If we shift to the 4 hour time frame, we can see a very interesting thing right here. There was a bullish momentum. Right here, after which there was a distribution phase where the price consolidated in a range, and then there was a sell off again. Now if we see that there a rising wedge pattern is being formed right here, there are two possibilities which can happen. So the first thing which can happen is, let me just shift to the 1 hour time frame. So the first thing that can happen right here is the price can easily give a breakdown at this point, and then we can go short right here with our stop loss above the last swing high, whichever it is, and we should target for at least these lows as our targets, and successive swing lows, and we can take a huge target up to this point. The second thing that can happen is the price might rise up to this, might come to test this zone again after which we can spot at least any kind of reversal pattern. It can be a double top or any kind of bearish candlestick pattern, and we can go short right here. And our stop loss should be above this swing high. This was the last swing high, and our target and first target should be this support zone, and our successive target should be this swing lows. So that will be all for today's video. If you like the video, make sure to subscribe. Thank you.